The data is finally catching up to what I've been seeing out in the field for months now. We're getting a lot of indicators that the market is slowing, demand is softening. The one thing that remains really low is days on market. I would suggest that it's a really high demand market. That's not the feel of the market right now. So when I report these numbers for the previous month, a lot of these deals went into escrow, probably in May or maybe even in April too. So there's definitely a lag factor to this too. Let's take a look at what this means for you as a buyer, seller, or investor right now. Hi, welcome to Invest with Jim, where you'll find real estate insights that no one else is sharing. I'm Jim Fong, a real estate agent and investor here in Las Vegas, and I break down the local housing market, not just the data, but what it actually means. Because in this market, knowing what's really going on can make or save you tens of thousands of dollars. We've had a slight uptick in active listings from July to August, going from 65, 61 to 6650, but with fewer actual closings. Sales dropped 6%. That's a continuation of a trend that I've been noticing since spring. Right now, the inventory is high, so if you're thinking about buying, could find good deals out there right now. It's kind of a really strong indicator for me that we're really in a buyer's market right now. Inventory has been rising, but buyer activity has been tapering. Sellers are still listing high. Median list price held just under $491. Median sale price dipped again to $483,000. Days on market continues to tick up, rising from 24 to 26. If you've been watching, I don't totally trust this data point here. If you want to hear more about what I think about that, click up here. I did multiple videos about days on market. We had just under 3,000 price reductions this last month, which is actually a decrease of 9% from the previous month, but we're still seeing a high number of price drops overall. Also keep in mind that the fact that there were price decreases is also a result of more homes being withdrawn from the market, right? So there's sellers out there that are basically saying, I'm not going to keep dropping my price. Let's just cancel the listing. I'm not selling my house anymore. And the withdrawals tells me a lot, actually. In August, there was over 1,000 homes that were taken off the market or delisted. So the withdrawals tells me that basically we know that there's a lot of inventory on the market right now, but in my opinion, not all of them are actual real sellers, right? When people need to sell because they were relocated for work, or they're growing their family, or maybe they're empty nesters, they need to downsize, or they need to go to a one-story or something like that. These are normal things that occur that cause people to start thinking about selling and buying and stuff like that. The casual people that are just like, hey, if I can get this number, then I'll sell it. They're not real sellers, because chances are they're not getting the number that they want, right? Prices are dropping. They're not going to get that high sale price that they were hoping for. And they are like, you know what? I'm not going to sell my home anymore, right? So those are not real sellers, in my opinion. Those are just people testing the market, if you will. Here's another point about days on market too. Of those homes that were withdrawn from the MLS or the market, the median cumulative days on market were 132 before they took those off. So, over 4 months before they took the home off the market too. And that also further skews the days on market number. So if you are a real actual seller right now, price and presentation matter more than ever. Buyers are very selective and stale listings are being ignored. And more things about sellers. We have 3,136 homes listed for sale and 1,885 homes listed for rent. 56 of those are listed for sale and for rent. This is not a bad strategy. Obviously, the homes that are listed for sale and for rent are owned by investors, of course, right? If they get the price they want, they'll sell. If not, they'll just keep renting it out. But a regular home seller can think about this strategy as well too, right? Because let's say you bought the home not very long ago, maybe just 1 year, 2 years, something, or maybe you bought a brand new build, right? And you need to sell now. Well, there's a good chance that you do not have a good equity position right now because the market's flattened and decreased a little bit. And now as a seller, you have all these selling costs involved with selling your home. So a lot of sellers are actually upside down, if you will, or they would have to pay money to get out of the house, meaning they owe more than it's selling for, or they have to cover the cost of selling the home, right? So rather than taking a big chunk of money and paying to get out of the home, why not try renting it out to kind of lessen the blow a little bit? Let's just say your mortgage is a little higher than what you get for rent. You can still rent it out, recoup as much as you can, and then maybe you're just paying a little bit into it every month. I mean, if you make up $500, $1,000 or something like that every month, it's not as bad as paying $20,000 out of pocket just to get out of a house. A point that I want to bring up is real estate markets don't turn on a dime, all right? It's more like a cruise ship in a harbor. You have to take a slow, wide turn to turn around. Homes are gonna dip for a while before they actually turn around and start going up again, right? So that's not gonna happen with a small rate drop next month or something like that. It's gonna take longer. So let's just say you end up renting out your house for a whole year, market improves, and in the meantime, you only took little hits along the way to get to that price you finally needed to get to and not have to take a big lump sum to pay to get out of your home. I see this strategy when working with investors, and I think it's a good one, actually. So I'm actually sharing this with my own sellers as well, too. Like, when you think about the numbers, this is not a bad option because real estate is a long-term investment. You want to hold it over time. The longer you hold the investment, the more it's going to be worth and more equity that you have. So I started reporting this new number last month about foreclosures and short sales, right? We had 97 new short sales and then 97 foreclosures started and then 116 actual foreclosures for sale so far in 2025. So I wanted to take a look at year-over-year numbers. So where are we compared to last year? Turns out that we're on track to do about the same numbers as last year, actually. So we had 452 distress sales this year. Last year, there was a total of like 670. So we're on pace to hit that same number right now. So while I was looking at this data, I figured, let's go back further, right? Took it back 10 years, went all the way back to 2015. Wow, those numbers were crazy. I mean, the number of foreclosures for sale back then was like over 7,000, right? So, you know, I thought, well, maybe that was still coming out of that real estate bubble recession, like kind of finally coming out of it. The banks finally finished foreclosing, finally put the homes on the market. So I understand why it was higher then, because as I look from 2015 moving into 2017, 18, 19, and all these, there's a sharp decline in distress sales. The only time you see a really, really big drop in these type of sales are in 2021 and 2022. And the reason for that is because there was a moratorium on evictions and foreclosures due to COVID and the pandemic. When I look at where we are now compared to all the years of the last decade, I'm not really alarmed at the moment right now. We're very low still. And I think that's because we saw such a sharp appreciation since 2021 that a lot of sellers have equity in their home still. That's why they're not letting the home go or doing short sales, because they actually still have equity and they're trying to sell and recoup that right now while they still can. This is something that I'm going to keep tracking though, because as an investor, when you see these numbers go up, that could be a sign that opportunities are on the horizon. Recently, I've been working with more active buyers as well too. Now, this is the thing that keeps coming up right now is the market is declining. What should we offer on this house? If we pull comps and look at the recent solds in the area, are we going to offer what the last comparable home was? Well, most buyers are telling me that they want to offer lower because they think the market's going that way. And I don't think that's a bad strategy, honestly, because it does seem like we're going lower. So why would you pay what the last person paid in a declining market? That makes a lot of sense. But you have to be careful as well too, though, because you can't always pay future pricing right now, right? Because you may think that the real estate market is going to dip another 10%, and you might just offer 10% less than the current market value right now, thinking, well, that's where we're headed anyways. That could work, and I don't disagree with that strategy, but that does not mean that the seller is willing to take that right now. And that brings me up to another point, you know, because if you're a buyer in this market right now, you want a deal. We all want deals, right? But then you also want a lot of these perfect things that you prefer. It could be, I want a one-story. I like the layout like this. I don't like open floor plans, or I don't need a fireplace, whatever. Those are kind of personal things. I'm always telling buyers, you have to be careful. If you want a deal, look for the deal. Look for high days on market. Look for many price reductions. Look for maybe it has a deficiency, like maybe it just has old carpet that needs to be replaced with newer like vinyl flooring or something. That's a value add, you build equity, things like that. Those are opportunities right there for you to get a deal. But if you want a pristine, recently remodeled, turnkey home with a perfect backyard in a perfect school district for your family, you may not get that deal that you're looking for. So be careful. So when you're looking, are you looking for the deal or are you looking for the perfect house? Because they may not align that way. So if the deal is more important, let's look for deals and why those are deals. And if you're looking for the perfect home, you're still going to have great leverage in negotiating, but you might not get the deal like way below market you're looking for. And one more thing that people are talking about a lot are these rate cuts that seem to be imminent this coming month. If they do cut rates, it sounds like it's only going to be like a quarter point, 1/2 at most. We're right around 6.5 right now too. So, you know, it's going to help with affordability for, you know, first time buyers, things like that. But I don't think it's going to move the needle drastically in this market. That's just my opinion. So if you're thinking about buying, selling, selling or investing right now, don't just read the headlines. You need to work with somebody who's actually studying the market in real time and working with actual buyers and sellers. That's what I do every day. Reach out, give me a call, or go to my website. Let's connect and let's talk about strategies for you. All right, here's the part where I break down the numbers by area now too. So Summerlin, it's kind of been cooling. Sale prices have dropped about 2.5%. Listings are down almost 20%, which tells me that sellers are pulling back rather than price cutting, all right? But interestingly enough, the price per square feet slightly went up. So buyers are still paying a premium for turnkey, well-located homes. And if you're in Summerlin, focus on quality. Don't overpay for dated listings. If you're selling, make sure you stand out or plan to price aggressively. Henderson is where we're seeing one of the biggest drops. Sale prices went down 4.7% and the median price per square feet dropped nearly 10% month over month. Listings actually went up and sales dropped. That's a softening demand in this area, clear and simple. I think buyers have the leverage and sellers don't ignore this shift. And then moving up to the Northwest, prices held steadily here, but days on market actually dropped slightly to 25 days only. It's not a big swing. Listings and sales have both dipped a little bit in this area. But all in all, I can tell you that the Northwest is a steady market, but it is still susceptible to the broader slowdown. So investors may want to watch this area for deals in Q4. Southwest actually saw a small bump in sale prices. It went up 1.5%, but days on market rose slightly. Price per square feet also increased slightly. The list to sale price ratio here actually went up 3%. This could be a fluke though. Maybe it's just summertime deals or incentives by builders. I mean, I'll definitely keep an eye on this area a little more. It's interesting to me. It's not behaving like the rest of the valley. Finally, moving up to North Las Vegas, days on market went up 31%. I mean, that actually is 6 days that we're talking about. But interestingly enough, sale prices went up in this last month here, while the actual number of sales went down along with price per square footage. Buyers have more time and leverage out here, especially if you're okay with older inventory. So all in all, looking at the by area numbers, nothing has shifted that dramatically, honestly. But one thing that I'm noticing is the fact that North Las Vegas, Northwest Las Vegas, and the Southwest had more sales than kind of higher cost areas like Summerlin or Henderson. And that just reinforces my thoughts affordability is the key right now. The lower end of market or starter homes, entry-level homes, whatever you call it, that's what's very active still. What is not active are more expensive homes, right? Because my thought on this is that I think in our country, people still benefit owning a home. They don't want to rent forever. They want to buy and own something, right? So what are they buying? Starter homes, all right? That's why we're seeing a lot of activity in the 400s or less, right? Where the market is really dead is like 6, 7, 800K. Those are those step up homes where people aren't moving just to move up right now. And who else is pushing the market? Investors as well too. Investors like to buy starter homes as well too, because number one, they're easy to rent out, and number two, they're easy to sell if they ever need to liquidate or cash out. They're just easier to hold in your portfolio if you're trying to, rent things out. What reinforces this most by the numbers here is I'm looking at list to actual sale price ratio, right? So what the list price is and what it actually closes at. The higher the sale price, the bigger the gap in that ratio. And the lower the price, we're seeing a smaller gap, right? So if you're buying a lower price home, the list price to sale price ratio is much higher than that in a higher price point. So if you have a starter home, you can still sell. So I've been saying this for months now. I felt like the market was cooling, even though the numbers had not reflected it yet. Market isn't crashing, but it definitely is cooling. Buyers are hesitant, and if you're listing now, pricing realistically from the start matters more than ever. The top dollar days are kind of behind us right now. So now in September, the data is finally caught up to reflect what I've been seeing in the market this whole time. Now to the personal stuff. What did I do this last month? I went to my first K-pop show. I went with Julie. She wanted to share it with me. It was awesome. I had a great time. Back to school this month too, so my kids went back to school. So my wife and I are back on taking them to all these activities and stuff like that. My son got selected to be in a leadership group, it's jiu-jitsu. And then my other son, he made his school flag football team, so we'll be out there watching football this fall. And I love football. The Ability Center, a nonprofit that I support, had our annual poker tournament, and my friend Calvin actually won the whole thing. So Good work there. I'm Jim Fong, Las Vegas realtor and investor, and I just love helping buyers and sellers and strategizing. So if you're trying to figure out whether to buy now, wait, sell, or hold, work with somebody that pays attention to the market in detail like this and actually looks at the numbers, and I'm not just reading a headline and just talking about it like that. Give me a call, text, or visit my website. Let's get connected. And if you found this helpful, like this video, subscribe to the channel, and share it to a friend that may find it interesting. Thank you for watching. I'll see you on the next one.